friends, comrades, neighbors, brace yourself now. Something crazy just happened. But before I tell you exactly what it is, I need you to ask yourself a simple question. Why is it that every few months, every few years, we find ourselves stunned, shocked, blindsided by an event that nobody saw coming? The truth is, we did see it coming. We've been living inside a system that guarantees it. And the crazy part is not the event itself. It's that we keep pretending this system will work differently next time. So what happened? A financial collapse here, a political scandal there, strikes breaking out across industries, or corporations suddenly laying off tens of thousands while their CEOs walk away with bonuses that could feed a small nation. That's the crazy thing that just happened. And yet, when you peel back the headlines, you see the same repeating story: a profit-driven system, capitalism, endlessly prioritizing the wealth of the few over the survival of the many. What shocks me, and I hope it shocks you, is not that corporations act in ruthless self-interest. That's built into their DNA. What should shock us is how willing we've become to normalize it, to accept it as just the way things are. Brace yourself, because the real insanity is not the so-called crisis of the week. The real insanity is that working people over and over again are asked to pay the price while being told to tighten our belts, make sacrifices, and be patient. Meanwhile, the wealthiest slice of society floats away untouched, enriched by the very disaster that ruins everyone else. The crazy thing that just happened is not an accident. It is not a mistake. It is a feature of a system that has always worked like this. Crises are not the exception. They are the engine. They are the fuel. And every time the system breaks down, those at the top use it to strengthen their grip. That's the madness. You, me, all of us, we are not powerless in this. The system depends on our labor, our consumption, our compliance. The moment we stop buying into the myth that this is the best we can do, the moment we begin to demand real democracy in our workplaces, in our communities, in our politics, then the crazy thing won't be what happened to us. It'll be what we finally did to change it. Another crisis has erupted, and yet when we look closely, it is striking how familiar the pattern is. We are told each time that this one is unique, that the circumstances were unpredictable, that no one could have foreseen such a disruption to the economy or the political order. But history, if we take the time to study it, reveals otherwise. These so-called surprises follow a rhythm, a recurring cycle baked into the structure of the economic and political system we live under. Whether it is a sudden wave of mass layoffs, a financial collapse in the banking sector, or a scandal at the highest levels of government, the story almost always follows the same arc. The public reels in shock, leaders scramble to contain the damage, and the voices of authority insist that the event is an anomaly. Yet before long, another once-in-a-lifetime crisis emerges, and the cycle repeats itself. The key issue here is not that crises happen. After all, in human societies, unforeseen problems will always arise, but that our system produces them with such regularity that they can no longer be considered accidents. They are built into the design. An economy organized primarily around the private pursuit of profit, without sufficient guardrails or accountability to the public, will generate instability as reliably as fire generates smoke. Businesses compete to maximize returns, cutting corners where possible, taking risks when they see potential reward, and externalizing costs onto workers, communities, and the environment. Each individual decision may make sense in isolation, but the aggregate effect is a volatile system where bubbles inflate and burst, where inequality deepens, and we're the social safety nets designed to catch people fray under the pressure. This is why, when one crisis fades, another is already in the making. 2008 financial collapse was followed by years of austerity measures, foreclosures, and stagnant wages for working people. That was presented as a lesson learned, a warning never to allow such reckless speculation again. Yet less than 2 decades later, we are once again confronted with banks in trouble, households drowning in debt, and governments bailing out institutions deemed too big to fail. In the political arena, scandals are treated as isolated failures of judgment by individual actors rather than as predictable outcomes of a system that rewards money over merit and influence over integrity. The cycle of crisis is thus presented as a chain of unrelated accidents, when in reality, it is the visible surface of a deeper structural problem. The tragedy, and indeed the dangerous absurdity, is that these crises are repeatedly paid for by those who had the least to do with causing them. When corporations shed tens of thousands of workers in a matter of weeks to protect their bottom line, it is not the executives who face eviction, medical bankruptcy, or the impossible choice between paying rent and buying groceries. When governments rush to stabilize markets, it is public funds, taxpayer dollars, that are mobilized to shield private fortunes, while ordinary citizens are told to tighten their belts for the good of the nation. The cycle is consistent, risk is privatized, but loss is socialized. The rewards are concentrated, while the burdens are dispersed across millions of households. It is in this repetition that the real crazy reveals itself, not in the fact that crises occur, that is, by now, the most predictable feature of our system, but in the collective willingness to be shocked by them as though each were an unexpected lightning strike. The public discourse often frames them as natural disasters, sudden, uncontrollable, the product of forces beyond human design. But these events are not earthquakes or hurricanes. They are outcomes of human decisions, shaped by the rules and incentives of the system we have constructed. To continue reacting with surprise is to participate in a kind of societal denial, a refusal to confront the underlying mechanisms that make these breakdowns inevitable. And so every few years, when the next unthinkable collapse, scandal, or disruption occurs, we go through the same motions. The headlines scream, the markets wobble, politicians call for calm, and working families brace for another round of uncertainty. The deeper truth, however, is that this is the normal operation of a system that is designed to produce precisely these outcomes. The pattern is clear. The question that remains is whether society will continue treating these recurring crises as random storms that come out of nowhere, or whether it will finally recognize them as the predictable consequences of a structure that values profit above stability and private wealth above the public good. The real shock is not the crisis itself, but the way society has learned to normalize it, to fold it into everyday life as if it were an unavoidable inconvenience rather than a glaring sign of systemic failure. When a new scandal erupts, when another round of mass layoffs is announced, when wages stagnate while living costs soar, the immediate response is often outrage. Yet almost as quickly, that outrage turns into resignation. People are told this is the price of progress, the unavoidable collateral damage of an economy that otherwise brings innovation and growth. What should strike us as unacceptable instead becomes a grim routine. The ability to normalize crisis, to adapt to dysfunction, is perhaps the most dangerous trait our system has cultivated in us. Consider how the narrative is shaped each time workers are told to make sacrifices. During recessions, employees are laid off in the name of efficiency, and those who remain are urged to accept heavier workloads without complaint because, after all, at least you still have a job. When prices rise, families are advised to cut back, to budget more tightly, to adjust their lifestyles to meet the new reality. But what is rarely mentioned is that at the very same moment corporations are posting record profits, executives are collecting multi-million-dollar bonuses, and shareholders are celebrating windfalls that far exceed any prior year. The language of shared sacrifice is wielded selectively. For the vast majority, sacrifice is mandatory. For the minority at the top, the crisis is an opportunity. This normalization extends beyond economics into the broader political culture. Scandals at the highest levels of government, cases of corruption, abuse of power, or blatant conflicts of interest are treated as spectacles consumed with a mix of cynicism and entertainment. They generate headlines, dominate the news cycle, and then fade into the background, replaced by the next scandal. Each time the public shakes its head, but rarely does the machinery of power change. The message absorbed, often unconsciously, is that corruption is not a deviation, but an expectation, not the violation of democracy, but its steady companion. To normalize it is to abandon the very idea that politics could be conducted with integrity or accountability. The role of media in shaping this normalization cannot be overstated. Instead of consistently tracing the systemic roots of recurring crises, coverage often zeroes in on the surface level drama, the reckless banker, the corrupt politician, the struggling family. While these stories matter, they are too often presented as isolated, disconnected fragments. The larger structure, the set of rules and incentives that keeps producing the same results, is left unexamined. In doing so, the media inadvertently trains the public to view crises as natural, individual, or exceptional rather than structural. This is how the unacceptable becomes routine, not through direct persuasion, but through the slow erosion of expectations. Meanwhile, the psychological toll of normalization is profound. People begin to lower their standards of what is possible, what is fair, what is deserved. When wages stagnate for decades, workers stop expecting raises that keep up with productivity. When healthcare remains tied to employment, millions learn to accept that losing a job means risking bankruptcy from medical bills. When student debt balloons into the trillions, young people are told to be grateful for any chance at higher education, even if it shackles them financially for life. Each crisis becomes folded into the background of daily existence until the extraordinary feels ordinary and resignation replaces resistance. Yet this normalization is not simply a passive process. It actively benefits those at the top. By framing crises as natural or unavoidable, elites avoid accountability. When a corporation slashes jobs to increase shareholder value, the act is described as tough but necessary. When politicians vote for policies that enrich donors while hurting constituents, it is labeled pragmatism. By presenting injustice as inevitability, those in power secure their position, while those bearing the brunt of crisis learn to carry the burden quietly. What should shock us most is how inverted this reality has become. The scandal is not only that crises happen, but that we have been trained to treat them as ordinary. The extraordinary wealth accumulated at the top in moments of widespread hardship is brushed aside as the normal operation of markets. The extraordinary suffering of millions during each downturn is brushed aside as unfortunate, but unavoidable. Normalization ensures that nothing changes, because if people cannot even imagine a different outcome, they cannot organize to demand one. When people describe the crises of capitalism as accidents, as unfortunate missteps in an otherwise efficient system, they misunderstand the fundamental reality of how this system functions. These breakdowns are not bugs in the code, they are the code. They are not interruptions in a smooth process, they are the fuel that keeps the process moving. A system built on the relentless drive for profit cannot help but produce instability, because the very mechanism that pushes businesses to succeed, competition, risk taking, cost cutting, also guarantees periodic collapse. In this sense, crises are capitalism's way of clearing the field, of wiping out weaker players so that stronger ones can consolidate more power and wealth. Look at how financial markets operate. Banks and investment firms push riskier products, stretching rules and inventing new instruments to maximize returns. The incentive to gamble grows stronger with each round of profits until the bubble bursts. When it does, the losses are catastrophic, not only for the institutions, but for millions of workers, homeowners, and communities far removed from the speculative games on Wall Street. Yet, as history has shown time and again, the collapse itself creates opportunities for those with cash reserves and political influence. They buy up distressed assets at bargain prices, they lobby for bailouts, and they emerge from the rubble even more dominant than before. The crisis is thus not only predictable, it is profitable for those positioned at the top. The same logic operates in the corporate world. When a downturn hits, businesses slash payrolls, shutter plants, and abandon entire communities. From the outside, this looks like a devastating failure. From the boardroom, however, it can be spun as a necessary restructuring. Share prices may dip briefly, but once the layoffs are complete and the balance sheet is cleaned up, those shares climb again, rewarding investors and executives handsomely. Lives of workers are upended, but in the calculus of profit, their suffering is incidental. The crisis becomes an instrument, a tool to reshape the labor force, to discipline workers into accepting less, and to consolidate control over production and distribution. It is crucial to recognize how this system transforms breakdowns into opportunities for accumulation. Each recession weeds out small businesses that cannot survive prolonged downturns, leaving larger corporations to absorb their market share. Each political scandal discredits public institutions in ways that can be exploited to justify privatization, deregulation, or further concentration of power. Each economic crash creates the pretext for austerity measures that weaken social programs and erode labor protections, leaving workers more vulnerable and employers more powerful. In other words, what appears as crisis from below often appears as strategy from above. This is why the claim that capitalism is self-correcting is so misleading. The corrections it makes are not toward stability or fairness, but toward deeper concentration of wealth and influence. After every major downturn, the largest corporations emerge even larger, the wealthiest households even wealthier. After every cycle of political corruption, the system of campaign financing and lobbying remains intact, often stronger. The crisis does not eliminate the flaws of the system, it reinforces them. The broader society, however, absorbs the consequences in ways that are destabilizing and destructive. Workers lose jobs, families lose homes, savings are wiped out, and public services are cut just when they are needed most. Communities fracture under the strain, and trust in institutions erodes. For ordinary people, crises are traumatic ruptures that can take years, even decades, to recover from. For those at the top, they are moments of adjustment, chances to reconfigure strategies, and opportunities to consolidate gains. The contrast is stark, and it illustrates how deeply crises are woven into the fabric of this system. If these breakdowns were truly random, if they emerged from mistakes or accidents, then reforms might be enough to prevent their recurrence. But because they are structural, because they grow directly from the DNA of profit-driven competition, reform only delays the inevitable. Regulatory measures may impose temporary constraints, but as soon as the memory of the last crisis fades, pressure builds to loosen those constraints in the name of growth and innovation. The cycle resumes, and another collapse looms on the horizon. It is important, then, to shift the way we talk about these events. They are not external shocks imposed on an otherwise stable system. They are not rare black swans that no one could have predicted. They are baked into the logic of capitalism itself. Each collapse, each scandal, each disruption is not a deviation, but a confirmation of the system's true nature. Recognizing this reality is the first step toward understanding why these crises keep coming back and why they will continue to do so until the underlying structure is confronted and transformed. Every time a crisis erupts, the burden of its fallout lands squarely on the shoulders of working people, even though they are the least responsible for creating it. This pattern is not an accident. It is the deliberate design of a system that protects wealth at the top while pushing costs downward. When corporations face losses, they rarely allow executives or shareholders to bear the weight. Instead, they pass it along in the form of layoffs, wage freezes, reduced benefits, and higher prices. Workers who had no seat at the table when risky decisions were made find themselves footing the bill when those risks implode. The same story plays out in public policy. When governments intervene to stabilize markets or rescue industries, the funds are drawn from taxpayers, many of whom are already struggling. The wealthiest actors who profited most from the speculation are shielded, while the average family pays twice, first through the initial damage of the crisis and second through the costs of recovery. Consider how mass layoffs unfold. When a corporation announces that it will eliminate thousands of jobs, the justification is almost always the same: protecting profitability and ensuring shareholder value. To those who hold stock, particularly the largest institutional investors, these layoffs are celebrated as smart business decisions. To the workers losing their livelihoods, they are devastating. Families are forced to drain savings, uproot from homes, or abandon education plans for their children. Entire towns can be hollowed out when a major employer shuts down operations. Yet, in boardrooms and in the financial press, such human consequences are treated as unfortunate but necessary adjustments. The idea that a corporation's health can be measured by how effectively it cuts labor costs has become so normalized that the pain of workers is rendered invisible. The dynamic is not limited to layoffs. In times of economic downturn, wage growth slows or reverses, benefits are trimmed, and workloads increase. Workers are told to be grateful for the jobs they still hold, even if those jobs now demand more hours for less pay. Employers exploit the insecurity generated by crisis to reassert control, making it harder for employees to organize or demand fair treatment. The imbalance of power widens, leaving working people more vulnerable long after the immediate crisis has ended. Meanwhile, executive compensation often continues to rise, with performance bonuses and stock options justified by claims of navigating turbulent times. In reality, executives are rewarded for shifting the consequences of failure onto those least able to bear them. Government policy reinforces this pattern. When banks teeter on the edge of collapse, they receive bailouts justified by the claim that their survival is essential to the economy as a whole. When entire industries falter, subsidies, tax breaks, and public loans are rushed to their rescue. Yet when working families fall behind on rent, mortgages, or medical bills, the assistance is slow, piecemeal, and heavily policed. The language changes too. Corporate bailouts are described as stabilizing the economy, while social support for individuals is condemned as dependency or handouts. This double standard reveals whose stability truly matters in the eyes of policymakers. Even in moments of national crisis, such as a pandemic, the pattern persists. Workers deemed essential are expected to risk their health to keep society functioning, often without hazard pay, adequate protective equipment, or job security. When profits are threatened, companies rush to cut costs, but when lives are threatened, the response is far less urgent. The irony is that those who kept societies running in the darkest times were often the lowest paid, least protected, and first to be discarded once the immediate danger passed. Their sacrifices were applauded in rhetoric but disregarded in material terms. This repeated shifting of burdens is not only unjust, it is corrosive. It deepens inequality, erodes trust in institutions, and fuels the sense that the system is rigged. For working people, every new crisis becomes a reminder that their labor is indispensable, but their well-being is disposable. They are expected to absorb the shocks, to tighten belts, to sacrifice for the greater good, while those at the top insulate themselves with wealth and political connections. The lesson is clear. Risk is privatized when times are good, but socialized when times turn bad. Profits flow upward, while losses trickle down. The cumulative effect of this pattern is devastating. It traps millions in cycles of insecurity, ensuring that even brief recoveries are overshadowed by the anticipation of the next crisis. Instead of building resilience, society builds fragility, with the weakest shoulders carrying the heaviest load. The wealthiest actors, meanwhile, emerge not only unscathed, but often enriched, having used the crisis as an opportunity to consolidate more resources and influence. The injustice of this arrangement is profound, but what makes it even more striking is how routine it has become. Each time, the burden falls on the same group, and each time the system insists this is the only possible outcome. At the center of every crisis lies a choice, though it is often disguised as inevitability. The choice is whether society will accept the next breakdown as just another chapter in a long line of misfortunes, or whether it will finally demand something different, something deeper, something that strikes at the root of the system itself. The constant refrain from those in power is that we must weather the storm, be patient, and trust in the resilience of markets and institutions. Yet resilience for whom? Markets may bounce back, corporations may regain profitability, and stock indices may climb to new highs, but for millions of ordinary people, recovery is uneven at best and illusory at worst. The question then is not whether another crisis will come, it surely will, but whether society will continue to absorb the blows without contesting the arrangement that makes them inevitable. The demand for democracy has always been central to moments of transformation. Political democracy, the idea that citizens should have a voice in the decisions that govern their lives, has been fought for and expanded over centuries. Yet economic life, where people spend most of their waking hours, remains largely exempt from that principle. Workplaces are organized as hierarchies in which a small group of owners and executives make the decisions, while the vast majority carry them out. It is this undemocratic structure that allows profits to be prioritized above stability, sustainability, and human well-being. Workers are told they should be grateful for employment, but they are denied any real say in how their labor is used, how the wealth they generate is distributed, or how the risks of crisis are managed. The choice ahead is whether to continue tolerating this contradiction or to demand democracy in economic life as vigorously as we demand it in political life. Imagine if workers had a direct say in whether their jobs would be eliminated, whether their wages would stagnate, or whether the company would pursue risky strategies that could endanger everyone's livelihood. Decisions about restructuring, offshoring, or speculative investment would look very different if those affected had an equal voice. The logic of short-term profit would not be able to dominate so completely if it had to contend with the long-term interests of the community. In this sense, expanding democracy into the workplace is not only a matter of justice, but also of stability. It is one way to break the cycle that keeps producing crises and forcing workers to absorb the fallout. But the choice is not limited to the workplace. It extends to politics, where corporate lobbying and campaign financing distort priorities, ensuring that policies serve the wealthy few rather than the public. In moments of crisis, this distortion becomes glaring. Bailouts are fast-tracked for banks, subsidies are approved for corporations, while ordinary citizens wait months or years for modest relief. If politics were less dominated by money, if ordinary people had greater leverage in shaping decisions, the response to crisis would look very different. It would focus on preserving livelihoods, protecting communities, and investing in resilience rather than restoring the profitability of a select few. The choice also extends to communities. Grassroots organizing, cooperative enterprises, and local initiatives demonstrate that alternatives are possible, that people can pool resources and govern them democratically. These models are often dismissed as marginal or impractical, but they reveal the lie at the heart of the current system, that there is no alternative. The truth is that alternatives exist and are already working in small pockets. The challenge is scaling them, supporting them, and integrating them into broader economic and political frameworks. That requires a collective decision to stop treating crises as natural disasters and start treating them as opportunities to rethink the system itself. It is tempting, of course, to believe that change will come from above, that leaders will eventually recognize the unsustainable trajectory and intervene in meaningful ways. But history teaches otherwise. Transformations occur when ordinary people, fed up with carrying the burdens of a broken system, organize and demand change. The labor movement, civil rights movements, and countless struggles for justice across the world testify to the fact that progress is never granted. It is won. The choice then belongs to the people. Continue waiting for the next crazy event, resigning ourselves to yet another round of sacrifices, or confront the system that guarantees these crises and push for a democratic reordering of economic and political life. The future hinges on whether resignation or action defines the response. Every crisis forces the question, but only people's collective decision will provide the answer. So brace yourself. Yes, something crazy just happened, but understand this. It will keep happening again and again until we, the majority, decide that enough is enough. The craziest thing of all would be to live through collapse after collapse, shock after shock, and still refuse to act. History is knocking on our door. The question is not whether something crazy just happened. The question is, what are we going to do about it? Thank you.